Afternoon and welcome to today's webinar on the Canadian Small Business Health Index. Thank you so much for joining us today. For those of you who haven't met me before, my name is Becky Oakes. I'm the Vice President of Advanced Analytics here at Equifax Canada, and I'm delighted to say I'm joined today by Arno Franco, Director of Economic Research for BDC. Now, before we get started, I'm just going to hand over to Jordan, who's going to talk you through a bit about the On24 platform. Jordan.
Thank you, Becky, and good afternoon, everybody. Each area within the On24 webinar platform is responsive so that you can maximize or minimize each widget or box on your screen based on your viewing needs. There is an Ask a Question widget underneath the media player, so feel free to enter any questions that you may have, and we'll try to address them throughout the session today. In the event that there are too many questions to get through, we will reach out to you individually to follow up in the coming weeks. Today's presentation and some related content in English and French are available for download in the related content area. This session is being recorded and you will receive the on-demand link via email tomorrow. Some additional features you'll notice on the bottom of your screen are reactions so that you can let us know how we're doing, our survey, and contact us. So feel free to check any of these out and provide your feedback. We really appreciate it. Now let's get started. Becky, back to you.
Thank you so much, Jordan. So just to give you a bit of an overview in terms of what we will be going through today, we're going to start off with formally introducing our new Canadian Small Business Health Index. And we're going to give you a bit of background about the how we've built that, the what and the why of it. We're then going to move into what that index is showing for the latest numbers, which are up until the end of Q3 2024. And we'll look at that nationally across Canada. And as long as we've got plenty of time, we'll go through some specific regional differences as well. But just to start off, super excited to launch our new health index. We do believe this is a definitive measure of the health of Canadian small and medium-sized businesses, and we're so excited that we are able to share this with you today. So the new index has been developed as a partnership between Equifax and BDC, and really we have a clear goal to provide a clearer picture of the SMB environment across Canada. Now, small businesses here in Canada form a critical part of our economy, with more than 1.2 million currently in operation across Canada, and that generates around $500 billion in annual economic activity. In fact, more than half of the Canadian GDP is actually generated from these small businesses, and almost 11 million Canadians are employed by them. So this is hugely important for our economy, and together, Equifax and BDC, we really felt there was a gap in some of the leading indicators that are available focused on the health of this part of the economy. And that's really kind of what we're trying to solve for with this new index. Now, you might be wondering, kind of, as we look at this, why we believe this new indicator is really going to provide something different to others which might already be out there. And the answer is that it really lies in that combined power of the partnership between both Equifax and BDC data, as well as the combined power of the expertise that each of us bring across the organizations. So we're leveraging BDC's Investment and Financing Outlook Survey, also known as the IFOS, as well as Equifax Canada's extensive business credit database data together to really provide that detailed picture of the resilience and outlook for small businesses with historical data going back to Q1 2022. So maybe Arno, you can maybe start to talk to us a little bit about how we built this index and maybe some of those key components that flow into this.
Great. Thank you, Becky, and thanks everyone for being here on this great day for this launch. So to talk a little bit about how we built this composite index, we've basically separated the economic indicators that we use to build this index in 4 different pillars. So I'll talk to you first a little bit about the business confidence sentiment pillar, which is one that's built off of BDC data from the IFOS survey that Becky just told us about. This is a survey that's put out to roughly 1,000 SMEs across Canada on a quarterly basis. And we ask a lot of questions of our SME, both clients and non-clients, in terms of trying to figure out how they position themselves in the market, where they think things are going, how happy they are with the current state of their financial offerings. So obviously we have a lot of data points that we needed to go through in order to select the right ones for us to use for this business confidence sentiment pillar. And after combing through a significant amount of information, we had to select data that was not only representative of the Canadian population of SMEs, but also available on a regional basis, because as you'll see later in the presentation, we are going to present to you this index with regional breakdowns. So with that in mind, we collected indicators that speak to a few different drivers. The first one being cash flow position. So in our survey, we ask our SME audience how their cash flow is evolving. Is it expected to improve, remain the same, deteriorate, et cetera? So that is one of the questions that has a bigger weight in this pillar. Another one that's important is, how do they feel about the economy? What are their general sentiment about economic conditions? Are they getting better? Are they the same, or are they worsening? That's another big contributor to that bucket. Then the other things we looked at are prepayment, if prepayment allows or limits an SME's growth projects in the future, and also their satisfaction with their current offering from their financial institution. So those questions comprise of the business confidence sentiment pillar, which is about 20% of this index. Then on to you, Becky, for business growth production.
Yeah, absolutely. So when we've been looking at business growth, so again, and maybe Anna, you can talk to kind of the survey part of business growth, but we've started leveraging the Equifax data in conjunction with some of the information from the survey itself to really look at some of those business growth components. And we're looking at elements that we appear in the credit file, looking at different measures and trends. So things, for example, like how is consumer spending changing, which does have a direct link into revenue for many businesses. We've also been looking at the growth of new businesses as they evolve and appear in credit files, looking at how those new businesses are starting to feed into our data and leveraging that as a kind of indication of current business growth. So I don't know, Anna, if you want to just touch on the survey side of the growth as well.
Yeah, for sure. So the really important questions here that we're asking of the SME audience is what their capital expenditure expectations are, because that's obviously gives us a good idea of what their investments are going to look like over the next 12 months. So CapEx expectations, a big part of that, and the other one is workforce expectations. So what do they expect in terms of their hiring? Are they expected to add workers, let some go, or is that expected to remain the same? And then the final element here is in terms of their sales. So what do they expect for their sales? Are they growing, or they remain the same, or pulling back?
Amazing, thank you. And then the third component that we have in the health index is really around credit performance, and this is where the Equifax business data is really the primary driver in terms of some of the measures that we're looking at in here. Now, our business data comprises of what we call financial trades. So these are direct with lenders, things like credit cards and loans that a small business may be undertaking, as well as industrial trade data, so more the supplier relationship side of things. And this actually makes up around 40% of the whole index. And what we're really tracking there is getting a view of what is happening right now, looking at things like missed payments, maybe insolvencies or business closures, and kind of tracking that to get a feel for what is happening with those lending and credit arrangements that are happening there. So that's kind of the credit performance side. And then we kind of move into the general business environment. And again, Arnaud, maybe you can share some thoughts in terms of the kind of the macro pieces that feed into this part of the index.
Yeah, certainly. So, as you are all no doubt aware, there are a significant amount of macroeconomic indicators that we could use in order to build this pillar of the business environment. So, every day, or it seems like as economists, we follow macro indicators, from inflation to jobs to construction, et cetera. And individually, we can derive, how we think that this affects the economy. But SMEs don't necessarily have that knowledge or that know-how. So the point of this pillar is to kind of bring together a host of what we believe is representative macroeconomic data in order to give one idea of what the business environment is doing. So in our variable selection, we had to be very careful not to include too many variables that were saying the same thing. That could cause problems with autocorrelation, for example. And we also wanted to choose data sets that were timely, so that we're available early enough, because obviously publishing this index, soon after a quarter close is very, very important. So for that reason, we chose to use employment data in lieu of GDP, because employment and wage growth data are generally pretty correlated with GDP. So they're timely, they're available at the end of the quarter. So we've chosen to go with that. We were also looking at the yield spread. Of course, that's a more longer-term indicator of economic strength. But the difference between the 10-year bond yield and the 2-year bond yield is a component in this business environment. And finally, we're looking at, obviously, the CPI. Inflation data are absolutely critical of considering when determining, the health of the business environment. So those are the 4 indicators that we've chosen to use, but obviously we have tested them, against other economic indicators to make sure, that we are accurately reflecting what we believe is the business environment in Canada. So I think I'll take it from here, and I'll start talking about the available resources that we've had in this project. As Becky mentioned, the attractiveness of this project is really about the collaboration with Equifax. So BDC, we have a very strong presence with SMEs across the country, but that credit side is something that Equifax brings to the table, and in a very, very big way. So the significant amount of data that we get to pull from is impressive. 4.2 million records captured by the Equifax commercial database, 300 plus B2B suppliers reporting on debt, 60 plus agencies submitting collection data on a monthly basis. And we mentioned also previously the IFO survey, 1,000 SMEs surveyed every quarter with a representative population in Canada. So it allows that to give us a nice regional breakdown of this index as well, which is absolutely critical. So altogether, this index provides a really unique snapshot of the Canadian business health. It's a composite index that doesn't only look at confidence, it also looks at real macro data, and it also draws from actionable answers, questions that have been answered by the SME community, which accurately reflect what their intentions in the next 12 months are. In terms of data availability, of course, this is where we're getting more into the nuts and bolts of things. But unfortunately, our IFO survey hasn't existed for the last 2 decades. So the available data that we have is relatively limited. Our data set goes back to the beginning of 2021. But all of you who are economists know that performing economic analysis of data during the pandemic is a little bit dicey. There was some very significant shifts that happened, a little bit of disconnects in some traditional relationships. So we chose to not include the data from 2021 in our first publication because there's a lot of disruptions, a lot of up and downs. But we do find that the index starts to show some real nice stability as of the beginning of 2022, when the Canadian economy was actually running quite well. So we've chosen to start the index as of Q1 2022. We've benchmarked it and set it to 100 as of that period. So when you're considering the output of the index, keep in mind that the value, the nominal value of the index compares to the first quarter of 2022. So you can ask yourself the question, how does the current context compare to that of 2022? But we don't want to just focus on that nominal value. In fact, what we want to focus on is the change, the evolution of this index, both on a year-over-year basis and on a quarter-over-quarter basis, because that's where it gives us the direction. Comparing ourselves to a level of 2 years ago is a little bit of a disconnected concept because things are different. All economic cycles are different, but seeing how we are evolving versus last year or versus the previous quarter, that is where we see a lot of the value of this index in terms of guiding SMEs and all of the suppliers that support the SMEs in Canada. So I spoke a little bit about the representation within the surveys that we've chosen to do, the questions that we chose, and a lot of this was built with the idea of it would be great to have a national index, but we know that the provinces of Canada are all different from one to another. They have, different drivers, different industries that they focus on, different conditions for consumers, for businesses, etc. So expanding this index into a regional breakdown was a priority for our group, and I'm very happy to say that we've successfully done that. Of course, because there are some smaller provinces in Canada economically wise, and a little bit less representation of businesses in those regions, we've had to group some of the provinces together. So you'll see for Atlantic, for example, we've grouped New Brunswick, Nova Scotia, and Newfoundland, and we have a central grouping, so for Manitoba and Saskatchewan. But we have individual indices for BC, for Alberta, Ontario, and Quebec. And it's with very great pleasure that we present those to you today. So how should we use this index? Well, this index is going to help, like I said, bring to light the combination of economic forces for SMEs and those who support the SME industry, let's say, to make good decisions, for everyone to be working on a similar playing field in terms of interpreting all of these economic indicators. It should help generate market and economic insights, inform suppliers to the SME supply chain, and also give an idea of what the financial health of these SMEs are in a current context. So this will increase the confidence in all around the SME industry, and we're very, very excited to bring that to light today. So with that, I hand over back to you, Becky, to present the national index.
Yeah, thank you so much. So let's just take a bit of a deep dive into what's been happening since that Q1 2022 benchmark, and how we're looking up until the most recent data. And kind of a good place to start is, let's just take a bit of a step back and think about the economic conditions we've all been living through. I mentioned some of them earlier with the pandemic, and things have been quite volatile, really. And some of the changes that we've seen in some of those macro measures really have been fairly unprecedented. So we had the low interest rates during the pandemic. You combine that with all the benefit support. We had some pent-up demand as lockdowns ended and consumers wanted to get back to spending post-COVID. We saw supply chain issues, meaning that some of the manufacturers were really struggling. And what that led to was those really high inflation levels. And we started to see living costs increasing. And the response, of course, from the Bank of Canada was to start increasing the policy rates from the back end of 2021. And this has really impacted both consumers and small businesses a significant amount. So on the consumer side, for example, with those rising costs of living, we saw lower income and younger consumers initially starting to struggle as they tried to kind of manage through some of those increasing costs. And then more recently, actually, as we've seen interest rates rising in response to the Bank of Canada trying to kind of manage the inflation side of things, we've seen some of those financial pressures starting to show more on consumers with mortgages. And we've seen older consumers who own their own home being more impacted as those renewals start to come through. Now, all of this, of course, is not just impacting the consumer, it takes its toll on small businesses. As consumers start to struggle, we start to see reducing demand in certain industries. We've seen demand for higher wages starting to come through, because obviously they want to keep up with cost of living, and there's pressure on some of our small businesses to kind of support the people who work for them by increasing some of those wages. And then, of course, with the higher interest rates, that impacts businesses as well in terms of financing costs and some of the ability to grow businesses. So it's certainly been a challenging time across Canada for many. Now, the good news, of course, is that there is some light at the end of the tunnel. Canada, of course, has had strong population growth in recent years resulting from the immigration policy, and that's really helped to kind of prop up GDP, and to some extent, with inflation starting to cool, we're starting to get some relief as the Bank of Canada is reducing interest rates again. So we've had this really difficult period for both consumers and small businesses. We're starting to maybe see some potential turning point in that, and actually we're seeing things start to improve a little bit. And as we filter this through, I guess, to the health index that we're here to talk about, we're starting to see this in the overall numbers as well. So if we use that Q1 2022 as our benchmark period, we are seeing that we had that challenging period post-COVID. We see the index falling as we saw some of those challenges that I just kind of talked about from a macro standpoint. But the good news is that since the start of this year, we're finally starting to see some improvements in the index, suggesting a more optimistic outlook for small businesses in the coming months. Now, not only is this coming from that business environment, which is a large contributor to the year-on-year rise. If you look at the right-hand side, this kind of scales a little bit in terms of where some of the movement's coming from. We are hearing, as Arnaud mentioned earlier, from some of the survey work, we're hearing improved confidence in the outlook from small businesses. And on the credit performance side, we're starting to see some reduction in terms of what we'd call early stage arrears. So although we do have a bit of challenge starting to creep in later stage, so this is where businesses have been struggling and they've rolled through and they've missed payments for quite a few months, the early stage missed payments, that's really starting to slow down. And that gives us that confidence that we are perhaps reaching that turning point in Q3 of 2024. Now, I know you go out and you spend a lot of time talking to small businesses across the country. Is there any other thoughts or kind of color you can add to what we're seeing from the index for the national view?
Yeah, Becky, I mean, I would say that you're pretty spot on with your comments. Certainly the business environment is improving. I would warn, though, that the level of the improvement seems very significant, but you have to keep in mind that we're facing easy comparisons because the index was at its weakest point in the third quarter of last year as those rate hikes reached their apex. So at that point, the market had been feeling the impact already of high interest rates for a year, and then even further hikes came. So that comparison explains a lot why we see those strong results in the business environment aside. As far as how SMEs are feeling, I can tell you I was in Western Canada last week for Small Business Week, and the optimism is there. I think that there still is some caution. People feel the slower economic context that we're in, but these rate cuts that we've had have given a lot of confidence, and especially that jumbo rate cut that was announced last week, which of course is not included in these data that we're presenting to you today, because that would be in the Q4. So we can expect that we would see a better improvement, even more of an improvement in the index for Q4.
And do you see any potential headwinds? Obviously, there is good news coming in with, like you say, that jumbo interest rate cut that we saw. Do you see any, as we look into 2025, are there any headwinds that you're expecting that might kind of go against some of the improvements that we're seeing? Or
yeah, I think the major headwind would just be that I think there's a perception that the Canadian economy has maybe slowed a little bit more than what we would have liked. The slowdown in the Canadian economy is very much a desired effect, because we needed the economy to slow to deal with this very, very high level of inflation. So if the economy slows by more than what the Bank of Canada expected, then it might be difficult, for us to get out. It might require much stronger adjustments to the interest rate, which obviously the Bank of Canada will consider. They've said that they're going to be very data-driven in their approach. And I would say that inflation, the moderation of inflation has been very encouraging. But there are also some warning signs, and I'll talk a little bit more about this when we look at the Manitoba-Saskatchewan bucket. But we want inflation to be around 2%. So the comfortable band for the Bank of Canada is between 1 and 3. But when we fall below that 1% level, it can be worrying, because we could see spending start to slow in anticipation that prices are going to stop growing by as much and maybe even fall. And if we fall into a deflationary cycle, then that's a whole other set of complications. So moderation inflation is a good thing, but the Bank of Canada still considers that 2% inflation is a healthy level of price growth for the economy to move forward. So I think that that's one potential risk that we could face in the future.
Fantastic. Well, let's maybe move on then into looking a bit more at what's happening regionally. I know you just mentioned that we are seeing some differences. So maybe if I kind of kick off with the Atlantic region, so as Arnaud mentioned, this encompasses the Maritimes and Newfoundland. And as with the national view, we are seeing the index rise during the third quarter of 2024, but at a faster rate than that national view. So it's up around 7% compared to the 4.7% nationally. And it's higher than what we saw in the benchmark period of Q1 2022. So we're actually seeing the Atlantic regions in a slightly better position than perhaps the national average. And there's really two areas that are driving this. So first of all, that business environment, which we've talked a bit about on the macro side, that has actually substantially improved in the Atlantic region compared to 12 months ago. So for example, when we look at things like the rising wages and inflation levels, it's a little bit more favorable than the national average for the Atlantic side of things. And we're also seeing improvements in credit performance. So again, this is an area where we're seeing early delinquency levels starting to fall, suggesting that stability might be returning a little bit, and we've kind of got over that hump that we've seen driven by some of the higher interest rates back in 2023. There is still a little bit of concern around new growth due to some of that potential caution on consumer spending side. So that's kind of the Atlantic side. I mean, Arnaud, what about Quebec? How does that stack up against the rest of the country?
So yeah, thanks, Becky. Actually, Quebec is in a pretty similar boat to the Atlantic provinces, if you will, in the fact that the index has shown a very strong year-over-year improvement of 8.5%. Again, though, that does speak to the fact that in the third quarter of last year, things in Quebec were actually at their most difficult level. In fact, if you recall, real GDP in Quebec declined for 3 consecutive quarters last year, which by some economists' terminology is enough to say that Quebec was in a recession. And certain key sectors, such as construction and manufacturing, they felt it very, very hard. So the strength of that business environment component really reflects a return to more normal business environment, which is obviously, a very, very good thing. So, we're comparing more positive results today to the trough of the economic cycle. Sentiment is also picking up in Quebec. Confidence is returning to consumers and businesses, especially as inflation comes under control and the Bank of Canada continues to loosen its monetary policy. But interest rates are still restrictive, so more work needs to be done. And this jumbo rate cut in October was obviously a very welcome news for those businesses. On the credit side, things have improved, but only slightly. Delinquency rates are still, a little bit high, but they have slowed down a little bit since the beginning of the year. As you mentioned, we are seeing progress there. And despite relative optimism, growth projections are still lagging. And that's a reflection that SMEs in Quebec are still cautious about their investment and their hiring plans. I think they still believe that the economy is going to slow, and they're not quite poised quite yet to act on that. But as we continue to see an improvement in the index, we should see a better result from this basket. So overall, it's a good improvement from Quebec, but I again want to reiterate that we're coming off a very weak base, so we need to keep that in mind when interpreting the index.
Fantastic. So maybe if I move on to Ontario. So Ontario is a bit of an interesting one, as unlike the Atlantic regions in Quebec, we're kind of seeing a little bit of degradation in the credit performance still in this province. And that's really despite those big jumps. We know there is improvements in the business environment compared to 12 months ago, but we are seeing the credit side still a little bit weaker. And actually our overall health index is kind of remaining below the Q1 2022 position for Ontario. But what we do need to remember is that for Ontario and actually BC as well, which we'll look at in a few slides' time, they've actually had some additional economic challenges in the last few years to kind of put on top. So things like the property prices, which have risen significantly, and that's not only having a large impact on consumers and their spending habits, but also that can start to impact businesses as well, because you have things like high rents and building costs, which have a knock-on impact directly to small businesses. So as I mentioned earlier, when we look at the credit health of consumers, we've seen deterioration in that homeowner group, especially in regions like Ontario in recent months, as those higher interest rates have really started to impact on things like mortgage renewals and mortgage repayments. And that's really kind of starting to feed into the small business side as well on the credit performance piece. Those changing macro conditions, though, they are starting to help Ontario, and we do expect that improvement to continue. The only slight word of caution, when we start to look at areas like Ontario and BC, is that we had the recent announcements about immigration levels, and we're going to see population increase might start to slow down a little bit. So that could offset a little bit of the improvement. because that immigration policy has helped, particularly regions like Ontario, with growth the last few years. So that could start to cool a little bit. But we do believe the outlook for Ontario is still quite positive. They just need to get over that additional hump that we've kind of had there. So I don't know, maybe Manitoba and Saskatchewan?
Yeah, so here we've seen the moderation in the index this year. It's down 1.5% year over year, although it is marginally improved versus the second quarter of 2024, and we expect that it should improve further in the final quarter of the year. So the story here, it's explained partially by actually quite a robust 2023. And in fact, the index hit its highest point of 2023 in the third quarter, making the comparisons a little bit difficult. This was helped by actually a strong residential construction sector, strong employment levels, and also retail sales, which held up relatively well. And that was supported by the fact that households in these two provinces are comparatively much less indebted than some of the other Canadian provinces, and inflation was less present. It was partially, helped by the fact that the Manitoba government installed a moratorium on the gas tax, which helped keep inflation, levels relatively low. So when we look at 2024, we are seeing signs of a pickup in the index, but growth projections remain muted by sluggish investment intentions from SMEs in the region. And the business environment segment is struggling because of weaker wage growth. And believe it or not, but I mentioned this earlier about inflation, but there's a little bit of a worrying development there, is that inflation in Manitoba and in Saskatchewan was 0.7 or 0.8% increase in the CPI, which is below that bracket that I talked about earlier that the Bank of Canada aims for. So the way that our scoring in the indicator works for inflation is that when you're within the target, it's good. We consider that that your result is relatively stable. If you're at 2, even better. But when you go outside of that band, it's a worrying development economically. So that dip in inflation below 1% does have some worrying signs, because it could hold consumers back from wanting to spend. It could actually slow the economy. So that explains why that business environment bucket is just a little bit or weaker than what we see in the other Canadian provinces. So there are some upsides, though, for the region, which are pointing to better results for the fourth quarter of 2024, which we expect.
Fantastic. And it's interesting how, as you mentioned, you don't always think about low inflation being necessarily a negative, but it actually can go both ways. So really interesting. So as we move to British Columbia, so as we saw with Ontario, we've had a little bit of volatility when we look at the index. So coming out of 2023, those small business conditions did start to improve as interest rates finally kind of reached their peak and started to come down a little bit. But the recovery really is slower than what we're seeing in other regions. We are seeing improved sentiment and confidence from small businesses compared to 12 months ago. And the credit performance side is actually being quite stable. But the real challenge here is around growth projections, that they're kind of slowing a little bit as a result of that sluggish economy. Now, BC's also been a province that's seen a slowdown in what we call interprovincial population movement since 2022. So if you go back a few years and look at kind of the population entering the province versus leaving, there was more consumers entering, which obviously helps small businesses. That's actually now flipped and reversed and seen a bit of a slowdown. So that also is likely to be contributing to maybe that slowdown in growth for British Columbia. So I don't know if you want to just finish off with Alberta.
So finally, Alberta saw a healthy year-over-year improvement in the index, growing by 1.3%. That's despite a very marginal slip in the Q3 reading of 0.2% versus the previous quarter. And it's especially good, the results for the province, because we see that the index was actually quite strong in 2023. In fact, it performed the best out of any of the other regions. And that's because the Albertan economy was relatively resilient in last year. So in 2023, there's a lot of good things that were going on for Alberta. First of all, population growth. Calgary and Edmonton saw some of the strongest population growth in any metro centers. And crucially important is that the residential construction market was able to keep up, especially in the middle of the year, with those incoming immigrants. And those immigrants, not only coming from overseas, but a lot of intra-provincial immigrants who were leaving more expensive provinces like BC and Ontario and seeking affordability and jobs in Alberta. So that population growth has kept consumption buoyant in Alberta, and that's been a contributor to that sentiment aspect, because people feel pretty good about the economy in Alberta. We had the startup of the TMX pipeline early on in the year, which will empower the energy sector, and we should see further growth there. And that is a sector that's absolutely crucial for the SME businesses that operate in that area as they contribute to that energy supply chain. So the decline in growth projections was mainly the result of a steady decrease in credit inquiries and new business openings. But intention investments are improving, especially as rate cuts are coming on, as the Bank of Canada loosens its monetary policy. And we should definitely expect a pickup as these rate cuts continue to impact the economy into the end of the year.
Fantastic. So maybe if we just pause for a few questions we've had come through. So I know first question was, how is this index different from business confidence surveys that many organizations publish? I don't know if you want to maybe take that one.
Yeah, sure. So, I mean, there are other indices out there that track confidence. The CFIB is an important one. I know it's a well-quoted index, and we like it. But we were looking for something that had a little bit more, real economic data, something that wasn't just about confidence. We do include survey elements, like we mentioned, which give an idea of where things are going. So we have a confidence element to it, but we really wanted to add some real data points to that. So for us, BDC, we often look at macroeconomic drivers, but that thing that we're missing, that we get a lot from this index, is that credit side of things. So the Equifax data, super valuable and super insightful, and really allow us to round out that credit side of things. So I'd say that this is a composite index. It goes way above confidence, although confidence is a component of that, but we've really tried to build to cover a lot of bases with all of the data sets that we're using.
Well, I would completely agree with that. I think that composite is hugely powerful and certainly adds something to the other types of information that's out there. There was one which came through, can we get this information for specific industries or cities? So maybe I can take that one. It's definitely something we're working on. Obviously, we need to ensure that whatever we put out is meaningful and we're not talking small volumes or anything like that. So it is something we are working on. We hope to kind of be able to expand this out in future. To what extent does the index predict future behavior as opposed to visualize past trends? Do you want to take that one on?
Yeah, sure. I mean, the sentiment components of our index are opinion-based. So, of course, there is a correlation between the results and sentiment, but they are still that sentiment. So they look at the balance of opinion of the SMEs, that fuel our economy. So, in a certain sense, it represents today what they think will happen. So I think in a very large part, the economy should be driven by those considerations. Obviously, there are things that can happen. There can be shocks, unexpected results that can change, the evolution of this. But I would say that today, the questions that we ask SMEs are very important in terms of determining, how the economy will go, because these are the businesses that are going to invest, that are going to hire, that are going to move our economy forward. And they're such an important part of the Canadian economy. So I would say that it really does reflect, what is happening today.
And I would just add to that, when we start to look at some of the Equifax data that we have feeding into some of the component parts like the growth and the credit performance, there are yes, there are certain elements in there which you could consider a lag or kind of a current state of affairs, things like current missed payments. But we're also looking at early warning signs in terms of certain credit behaviour that perhaps would indicate some stress starting to come through for small businesses. So we've tried to make the index kind of weight it in a way where actually it's taking into account, yes, what's happening currently, but also kind of what we think is directionally where we're heading with some of those key indicators. So we are taking into account kind of both sides of it on the credit side as well. Maybe just one more for you, Arnaud. The index leverages survey and actual credit data. How did you validate that your index made sense?
Yeah, of course. I mean, we've been building this index, for a number of months. A lot of work and rigor has gone into this, and a big part of that is, of course, validating the results of this index. So we've benchmarked it against a whole host of different indicators in order to see how are our different pillars performing, and that's one of the great benefits of this exercise of splitting things into pillars, is because the pillars can be individually sort of validated against other data series. So I mentioned the CFIB business barometer. It's a great confidence index, which we used to compare to our growth projections to make sure that we are saying similar things, like the question that we had earlier. How much is opinion actually reflected in real data? Well, I mean, that's a good way to test that. We also tested it against other Bank of Canada and Statistics Canada series. We compared our credit performance to Equifax commercial scores. We also compared them to the output gap that's calculated or estimated at least by the Bank of Canada. We also looked at some of the StatsCan opinion data about how businesses perceive the current situation and how it should change. So there was a number of benchmarks that we did, especially, like I said, with the different pillars, in order to convince us that the indicators that we were looking at were the right ones. And of course, this goes without saying that in the building of this, there was quite a bit of tweaking involved for us to make sure that we accurately reflected, historical evolutions in macro data.
Yeah, absolutely. So if another question came in, will this index be added to Bloomberg or other services so that it can be accessible to wider audiences? My instant reaction is I don't know, but that would be great, I think. Obviously we have created this index because we want the industry to be able to leverage it. I don't know if you've got any thoughts on that, but I would say we would love it to be used by other services.
Yeah, I mean, this is a first publication. We're obviously very excited, but the proof will be in the pudding, as they say. We're going to continue to monitor this, and so will agencies around there. I think what we can say, without any doubt, is that the excitement behind this index is palpable. There's a lot of people who see a need for this advanced indicator. So we certainly hope that it tracks well and it offers that real value. And I'm sure that if there's value there, then Bloomberg will be happy to pick it up. But it's the reason that we're doing this is to offer this very valuable information to the SME community and all of those services that are that serve those businesses as well. We want to democratize in a certain way, economic analysis, so that SMEs get a hand. It's hard to interpret all this economic data, so having somebody who can help sum that together and point you the way is very, very helpful, especially for those micro businesses which just don't have the time to delve through all the economic data like we do.
Yeah, absolutely. So you may be wondering how often we are going to be updating this index. It will be made available quarterly. So the Q4 2024 update is currently scheduled for the week of February 10th, 2025. So I imagine we will be kind of doing some webinars and things and talking about what we are seeing in the index at that point in time. Updates are also going to be available live. You can get to them via the Equifax.ca business pages, which is a link you can see on the screen right now. And apart from that, I guess on behalf of Equifax and BDC, I really want to take a moment just to thank you all for attending the webinar, for listening to us launch this health index. We are genuinely excited about what this can do for the industry. And if you do have chance before you leave today, please do take the time to fill out the session survey. We do love your feedback, whether it's good or bad. Please kind of give us your thoughts. And apart from that, I guess, thank you for attending today. Really hope you enjoy the rest of your day, and we hope to see you in February for the next update.
Thank you, everyone.
Thank you so much.
Have a great day. Thank you, Becky.
Bye.